But I think you have a view that tokenization is effectively going to change finance forever.
Yeah.
Welcome everyone. We're going to dive into some exciting developments in the world of tokenization, stablecoin development, and more. We're going to go over some statements from the IMF on the global development of the new financial system and how there's only going to be a few winners revolutionizing the way money moves, which points to the likes of Ripple, Stellar, and Zinfin Fintech's XDC network. We're also going to watch highlights from a very exciting recent Dealbook Summit. We're going to hear words from Larry Fink from BlackRock and Brian Armstrong of Coinbase discuss some exciting topics in the world of cryptocurrency and a tokenization landscape. So if you're an XRP, XLM, or XDC fan, don't forget to hit the like and subscribe. Let's go. Are you looking to accumulate more of your favorite digital asset through trading, but don't have the time, or maybe you're nervous about the risk? Now you can get an AI-assisted trading bot from 3 Commas to assist you. It not only trades for you while you're busy doing other things, but its step-by-step AI-assisted trading protocol allows you to feel confident in venturing into something new like trading. Get started on your trading journey and accumulate more coin. Affiliate link is in the description. Do you own your own business, or maybe you're a large Bitcoin miner? It's important to contact me now for a free report and consultation. You have options to take control of your energy. One is to get a free audit report. Another option is to make sure you're getting the best rate possible. You may have errors on your electric bill going back 48 months, which could mean a large refund for you through a simple audit process. My team of auditors look for errors such as duplicate charges, outdated tariffs, bad meter readings, capacity averaging errors that we find 80% of the time, and it's hidden on a line item. Stop allowing overcharges to cut into your precious profit. Let's make sure you're getting the lowest rate possible. You're never billed or given an invoice for our service. We deal directly with your utility. My email and phone with extension will be in the description below. BNY Mellon CEO Robin Vince sees tokenization as a megatrend, a core part of the bank's future, focusing on integrating blockchain for faster settlement and new liquidity by tokenizing real-world assets. Beyond just stablecoins, he views RWAs as essential infrastructure for modern finance, not just experimental crypto. Now, BNY Mellon, the Bank of New York Mellon Corporation, is a global financial services company that provides a wide range of asset management and corporate banking services. It is one of the world's largest custodian banks, managing trillions of dollars in assets.
Into digital assets and sort of this trend toward tokenization and how that plays into the business model a bit?
Yeah, sure, Carl. It's a really important trend. It's one of the mega trends. We identified a series of mega trends about a year ago, and we said we want to position our business, invest in those capabilities that will allow us to benefit from those mega trends. Because while we want to drive and are driving organic growth, we also want to make sure that we're attaching ourselves to these big market cycles, and digital assets is one of them. Now, that's not just stable coins, it's also tokenization, and it really is across the ecosystem. So we've been investing around the ecosystem for using our traditional assets and then evolving our traditional business assets to be able to be on-chain as well.
Tokenization and stablecoins are hot topics for the IMF, the International Monetary Fund, which is very significant, impacting the world. Now, the IMF views tokenization as a double-edged sword. It promises faster, cheaper financial markets by cutting out intermediaries and automating processes like instant settlement and collateral use, but it also risks amplifying volatility through flash crashes, creating systemic shock via interconnected smart contracts, and fragmenting liquidity if networks are not interoperable. Now, they're working on global standards with partners like the IOSCO pushing for coordinated regulation to manage these risks while realizing tokenization's benefits, emphasizing that policies are needed to ensure stability and prevent new vulnerabilities from emerging markets. Now, we know the companies that are working with the systems that are working to be interconnected and interoperable are the likes of Ripple, the Stellar Development Foundation, and Zinfintech. So this is definitely good. The IMF has stated stablecoins are designed to avoid wild price swings of NATO crypto assets like Bitcoin, which eliminates the volatility. While both are based on DLT technology, the main difference is that stablecoins are centralized, meaning they are run by a specific company, and are mostly backed by conventional and liquid financial assets, like cash or government securities. Most stablecoins are denominated in US dollars and are typically backed by US Treasury bonds. Well, we know three major companies that are working with treasuries. The Stellar Network plays a significant role in the tokenization of US Treasury bonds, which involves creating digital representations of these traditional financial assets on the blockchain. Several major financial institutions and fintech firms utilize Stellar for this exact purpose. There's also Ripple, which is actively involved in the tokenization of US Treasury bills on the XRP ledger and has made strategic moves into the broader crypto corporate treasury market, including a major acquisition and investment in a new crypto treasury firm, Ondu Finance. Now, the XCC network with Zinfintech is actively involved in tokenizing real-world assets, including tokenized US Treasury bonds via platforms like TradeTech, which offers USTY tokens representing shares in a US Treasury ETF, showcasing the network's strength in real-world asset tokenization for professional investors and use cases. The IMF is working on a global effort with international partners on closing these data gaps in the context of a group of 20 initiatives, and with Financial Stability Board and other standard-setting bodies on a comprehensive and globally coordinated regulatory approach. Tokenization and stablecoins are here to stay, they state. But their future adoption and outlook for this technology are still mostly unknown. Even industry leaders compare the current development to the early stages of the internet. It is conceivable that a few providers become global dominant players. Well, I believe we can see three players that will be leading that. Now, commercial banks are also active, issuing their own stablecoins and partnering with central banks to investigate how to incorporate the technology into their systems. Enhancing cross-border payments also goes through improving traditional infrastructure and building links between existing fast payment systems to provide faster, cheaper, and more accessible payments, improving the existing global financial infrastructure.
Money has come a long way since the first uses of shells or coins millennia ago. Today, it may even be considered our most used technology, as most people are using money that is recorded digitally. So what's the next step in this evolutionary story? Let's talk about tokenization, or how we turn our pocketbooks into something that's programmable. Why would we need programmable money? We use money to consume or save, and owning assets is a common way to save. Tokens can make it faster and cheaper to buy, own, and sell assets. Say that I want to buy a corporate stock or bond. Today there would be a long chain of middlemen between me and that company. Think for instance of a clearinghouse, an independent bridge between the buyer and seller of an asset. It waits to receive the buyer's payment and the seller's asset, and then exchanges them, avoiding the risk either side fails to deliver. But waiting costs time, and time is money in finance. Another example is registrars, institutions that transfer a company's interest in dividend payments to the asset owners. A tokenized market can automate their function. Tokenization can make financial markets faster and cheaper through programs that automate or reduce the role of intermediaries. Researchers who've recently studied tokenized markets found significant cost savings. Tokenization's promise is visible in the numbers.
Larry Fink, the CEO of BlackRock, the world's largest asset manager, and CEO Brian Armstrong of Coinbase were on the Dealbook Summit, an annual New York Times event hosted by Andrew Ross Sorkin. Bitcoin, stablecoins, and tokenization were among the major topics discussed. We're going to watch some clips to get a better understanding of how this is all playing out, and it's great to know that the United States is finally in gear to get things moving.
Pioneers from two different generations, dare I say, to talk about the future of finance at a time when we are going through a remarkable shift in all of it, from the passing of the Genius Act to the surge of stablecoins, prediction markets, now talk of tokenization, as well as where we are in our economy. And Larry Fink, of course, founded BlackRock back in 1988. Today, it's the world's largest asset manager, overseeing $13.5 trillion. That's with a T, if you can believe it. Brian Armstrong founded Coinbase in 2012. Today, it is the largest crypto exchange in the U.S. and has grand ambitions to do much more. In 2021, it became the first crypto company to go public and has $500 billion in assets on its platform. So, Larry, you were, though, on the other end of it, even on this stage in the past. You famously, in 2017, called crypto an index for money laundering. BlackRock...
And thieves.
And thieves.
Yes.
Money laundering and thieves.
Right.
You now have the biggest Bitcoin ETF. So what happened here?
You know, as the secretary said, you got to evolve and change. So, so I did say that. I think I said that in Washington, sitting next to Jamie Dimon. But during COVID, when we had a little more time on your hand, you weren't traveling around the world, I actually took it upon myself to visit and talk to a lot of people who were advocates of it. I wanted to understand, what am I missing? Why do I have that belief? And so I was testing myself like I do in many other things, and so around 2021, 22, I began to evolve those views. Those statements was not about crypto. Those statements were specifically about Bitcoin. So let me be clear too. But I see a big, large use case for Bitcoin, and I still do today. And so, you know, this is one thing that I get excited about. I have very strong views, but that doesn't mean I'm not wrong. But by having strong views, you have to test yourself and ask yourself. And, you know, in my role, I see, you know, thousands of clients a year. I have, you know, governmental leaders, and we have these conversations. And my thought process always evolves. And this is a very glaring public example of a big shift in my opinions.
And you can speak to this. Do you think that folks in the legacy or traditional industry didn't either get it, want to promote it, want to be part of it because they were scared?
Yeah, well, this is the classic innovator's dilemma, right? Anytime you have a new technology come around, everybody who's an incumbent has to decide, do we want to embrace it or do we want to fight against it? And in some of these larger organizations, it's kind of funny, actually, because there'll be a part of the organization, like their lobbying team in D.C., is actually fighting against it, kind of trying to do regulatory capture. But the innovation arm of the company is actually embracing it. And for many of the largest banks now, we're actually powering, you know, pilots with them doing stable coins and custody and trading and these kinds of things. And once in a while, we run into their lobbyists in D.C., and they're kind of trying to curtail it. And so, you know, I think it's like any company. You have to embrace change and be on the frontier. It's not unique to crypto.
Question, Larry, because you just wrote a piece in The Economist about tokenization. And I think that tokenization, some people here will know it well, some people will not, so maybe you can help level set. But I think you have a view that tokenization is effectively going to change finance forever.
Yeah.
Explain.
Okay. So there's so much conversation going on about AI and how AI is going to be reshaping the world. There's not enough conversation about how technology is going to be reshaping the financial services area too, and the need for democratization. As Secretary Besson talked about, the democratization of investing in America. There are slews of middlemen in the whole financial services area. We have elongated settlements, elongated processes. If we could digitize every asset, so if we could digitize all stocks and bonds and have it more seamless, going from a digital wallet of cash or stable coin into equities or bonds through in most categories through an ETF. It will reduce the friction costs, the transaction costs, and it allows a much more free flow. So there's $4.1 trillion of money in digital wallets globally, sitting in stable coins mostly. And can you now, and right now, if they wanted to go into a bond or stock or have a real estate transaction, they have to take the money out of the digital wallet into a traditional wallet and have all those commissions and fees and all that stuff. So the whole idea of tokenization of all assets, including real estate ultimately, is to just reduce huge friction costs, making investing easier, simpler. You could, as the secretary was talking about this one account, you could do this all through your app, and it's going to allow a more, I would say, a free-flowing process of investing.
Brian, if all of this happens, how does the finance industry change? Would you short all the credit card companies, for example? Because invariably...
That's the digitization of a dollar.
Well, that's the digitization. I mean, we can also get into stablecoins, which is the other piece of this, which is in some cases required for all of this. We didn't really talk to the Treasury Secretary about it, but underlying all of this has to be lots of treasuries, which a lot of the banks, one of the reasons I think banks have been frustrated or anxious about some of this has been the idea that there's going to be a flight of capital effectively out of the banks that's going to go to effectively support the stablecoin business, which ultimately will support in large part some of the transactional issues and potentially even some of the tokenization projects.
Well, in that case, I think that's just the banks trying to protect their profit margin. I mean, they should have to pay rewards and higher rates to their own customers. And I think they're trying to put their thumb on the scale of regulatory capture, essentially, to prevent crypto from doing that. But my prediction is actually the banks are going to start, we're already seeing this actually, they're going to be increasingly embracing stablecoins. And my guess is that in a year or two, they'll come back and say, actually, we want to be able to pay interest and yield on stablecoins in our own companies. And so it goes back to that innovator's dilemma situation. I mean, the best banks are leaning into this as an opportunity, and the ones who are fighting it are going to get left behind.
I would say as a country, we're late.
We're late.
Yeah.
We're late. So
who's ahead of us?
India and Brazil. So this is the biggest issue. We are a successful nation. So much of the foundation of our success has been the role of the capital markets. And this, if you think about how the U.S. economy was able to restabilize itself faster after the great financial recession, is because of the role of the capital markets. Now, that the secretary was talking about the role of private credit, but it was really the capital markets. And we are now starting to see in Brazil and in India a whole transformation of a digital economy. And they've digitized their currency. Now, you even have now credit card purchases on the pipe. Brazil itself, the PIX. And so what I am worried about, we're not moving fast enough. I didn't put this in the article because I didn't want to be that vivid on this. But this is one of my big fundamental issues. We need to move faster.
Why we need clear rules on the books in the United States. I think 2025 is actually, we'll look back on this as the year that crypto regulation went from kind of gray market to well-lit establishment, because we saw the passage of the Genius Act, which was huge for stablecoins. We've now seen a bipartisan vote for the market structure legislation in the House, and now it's going through the Senate. And so hopefully within a few months, we might get a vote on that in the Senate. And then I think we'll have the foundation to really have this industry be built in the U.S., and we'll see a little bit less of this kind of leverage or high-risk activity happening offshore. Yeah, well, our mission is to increase economic freedom in the world, and I prefer to do that just with our products and integrating crypto into the traditional financial system to update it. But it turns out over time that a big way we can accomplish our mission is actually holding bad government accountable, right? So if there's 52 million Americans who have used crypto and they want to see clear rules on the books to protect consumers, I think in the last administration we saw that our representatives in government were not actually fulfilling those values that the American people had. They were actually unlawfully trying to kill the industry. A lot of it went offshore as a result of that, and a lot of consumers got harmed. And so, we've always been very transparent about donations we've made to super PACs like Fairshake, but we also helped bring together a large number of voters to elect pro-crypto candidates. And to me, that's democracy working.
Learn more from Larry Fink and the COO of BlackRock, Rob Goldstein, from an article in the most recent Economist on tokenization transforming finance. They share how tokenization represents the next evolution of market infrastructure. Larry states it's about modernizing the systems that move capital, building a bridge to a more resilient and efficient financial future. You can download the full article from the description below. In the last video, we heard from Brian Armstrong of Coinbase basically state how the last administration was not too crypto friendly, and now we're finally getting the clarity and friendly environment that we need. Let's hear from Donald Trump, the President of the United States, and his take on crypto. And also, we're going to watch a clip on how the last administration was actually putting a stranglehold on this innovation at the expense of keeping America behind.
Bills passed in the next few months?
Well, it's a very funny thing, crypto. So I became a fan of crypto, and to me it's an industry. I view it as an industry, and I'm president. And if we didn't have it, China would, or somebody else would, but most likely China. China would love to. And we've dominated that industry. It's a big industry, by the way. In fact, when the stock market went down recently, crypto and Bitcoin and all of that went down much less than anybody else as a group. And we've created a very powerful industry, and that's much more important than anything that we invest in. We invest in it, but really that was an industry that wasn't doing particularly well. I got involved with it a couple of years ago, and before the second term. I got involved before I decided to run. I only decided to run because I saw what was happening, and Biden was incompetent, and the administration was crooked and incompetent, and I was in Bitcoin then, not knowing if I was going to do it a third time. So it's become amazing. I mean, it's the jobs that it produces. And I notice more and more you pay in Bitcoin. I mean, people are saying it takes a lot of pressure off the dollar. And it's a great thing for our country. So I don't care about investing. You know, I have I have kids and they invest in different things. They do believe in it. But I'm president, and what I did do there is build an industry that's very important. And, you know, if we didn't have it, China would. I want crypto. I think crypto is important because if we don't do it, China's going to. And it's new. It's very popular. It's very hot. If you look at the market, when the market went down, that stayed much stronger than other aspects of the market. But I want crypto because a lot of people, you know, millions of people want it. I don't know if you know that Biden went after it violently, and then before the election, he changed his tune entirely. His head of the SEC, everybody changed their tune. You know why? Because there were hundreds of millions of people that are participating in crypto, and they wanted to get their votes.
Welcome back. The House Financial Services Committee issuing a 53-page final staff report on how the Biden administration debanked digital assets. It details how Biden-era regulators used vague rules, excessive discretion, informal guidance, and aggressive enforcement, all to pressure banks into distancing themselves from digital asset clients. This resulted in at least 30 entities or individuals losing access to financial services. Joining me now is Arkansas Congressman French Hill. He's the chairman of the House Financial Services Committee. Mr. Chairman, great to see you this morning. Thanks very much for being here. I want to kick it off with your report. What can you tell us?
Well, Maria, happy holidays. Great to be with you. Hope you had a great Thanksgiving. This report identifies all the ways, led by Gary Gensler, who was chairman of the SEC, the bank supervisors led by Michael Barr, then vice chairman of the Fed, and others, to systematically debank legal businesses in the United States engaged in the digital asset innovative space. And this was terrible for American competitiveness, and it led me during the course of the Biden administration to offer my FIT 21 bill, which is now the Clarity Act, which gives the rules of the road, clear market structure road rules, so that people know how to innovate. They can count on the federal government for not debanking them and actually encouraging the use of innovation blockchain technology inside financial services.